if you're going to believe the options market on the Eurodollar futures curve. And then that's where you see inflation go from 7% to 12% to 15%. When you've got the majority of the source of energy in non-renewables, I think the global elite look at that and they say, okay, well, the population's going straight up, GDP is going straight up, but energy is the economy, like we were saying earlier. Therefore, if energy plateaus, then if population goes up, then the per capita GDP, i.e. the standard of living for the global population, is going to decrease. And I don't want my standard of living, this is the elites talking, I don't want my standard of living to decrease. Therefore, in order to maintain my standard of living, if we have to live on a set amount of energy, then your standard of living, George Gammon, Mark Moss, and everyone watching this right now, needs to decrease.
Right.
Therefore, your consumption of energy needs to decrease. So how would you get the world to willingly decrease their energy usage, therefore their standard of living? If you don't, Mark, the world's going to come to an end. Climate change. The whole petrodollar system is set up that's saying, okay, what is it, Kissinger in 72, 74, something like that. He goes down to Saudi Arabia, the OPEC countries, and he says, what we'll do is we'll provide the military and we'll give you quote unquote security, and you just price all of your oil in dollars. And but then fast forward to Afghanistan. I mean, if you're Saudi Arabia and that's the deal, that the United States, their end of the bargain is giving you military security, and you see what happens in Afghanistan. You don't think you're second guessing that deal? Hey, wait a minute here. Whoa. Why am I, taking on all this, why am I selling all my oil for dollars when that might not be advantageous? Maybe it is. But if it's not advantageous, why am I doing that if the military promise that I get really isn't that great? And so that could play into what we're seeing today as well, with these central banks starting to say, listen, if you want our oil, we'll settle in yuan. We're not going to settle, or not central banks, but commodity producing countries like Saudi Arabia. Or, there's also a deal that's been done between India and Russia where they're going to do transactions back and forth that are no longer settled in dollars either. A lot of people just look at this and say, okay, well, the dollar is doomed and it's going to lose reserve status tomorrow. That's probably not going to happen. Well, it's definitely not going to happen. But as far as even happening in a short term, 1, 2, 3 years, very unlikely, because you've got those banks in the Eurodollar system that, the viewers have to remember that the dollar, being the world reserve currency, isn't necessarily just about a green piece of paper. It isn't necessarily just because it's backed by, so-called U.S. taxpayers. It's really because it's a network.
Right.
It's like Facebook. It's like, this network effect in social media. And the dollar system is this network. And therefore, it's very, very difficult to penetrate that. And then you've got all of these banksters, let's call them, that are incentivized to maintain the network. They have been profiting on this network since the mid 1950s. When fast forward 10 years after Bretton Woods, and you get the Eurodollar system popping up because we weren't able to export enough dollars for the global economy to grow at maximum capacity. So they start generating their own dollars. Well, that turns into what we have today with these global banks just quite literally printing money or printing their own profits. And if you say, hey, we want you to give that up, I don't think the JP Morgans of the world are going to be willing to do that. So, or at least not without a fight. The CPI probably continues to go up Q2, but then maybe Q3, Q4 starts to go back down until we get a government response. And then, if we got M2 growing again by 25%, then you see the CPI start going back up again. Let's say 8.59%, wherever we are then, down to maybe 8, 7.5, something like that, because a few different reasons. Number one, they're raising rates. Number two, you see mortgage rates really going up.
Yeah.
Number three, you see incomes actually going down You see credit card debt going up. You see the inversion of the yield curve. The market saying that, at least the smart money in the options market saying, will most likely increase till 3%, 2%, something like that, Fed funds, and then they're going to break something, and then it's going to be so bad that they're going to have to take rates negative. Fed funds negative. Right. And so that's a lot of aggregate demand that is being destroyed, or is a lot less than it was in 2020 and 2021, which brought the CPI up to 8.5% in the first place. So if you've got that much aggregate demand being destroyed, then the other component there is, well, supply. So in order for prices to continue to go up, you would have to have supply being decreased at a faster rate. Now that's possible. That is absolutely possible, that we see aggregate demand go down, meaning people have less and less purchasing power.
That's the demand pull, they call it.
Yeah, and then you have supply, or the supply chains break down even further. We see obviously what's going on in Russia, Ukraine. That's not helping the supply chains by any stretch. And so the supply chains get worse and worse and worse. We have less fertilizer, therefore food prices go up. We have less access to less energy, therefore energy prices go up, and that filters through the entire economy. If you're going to believe the options market on the Eurodollar futures curve. And then that's where you see inflation go from 7% to 12% to 15%. And then we'll lose something. We'll take a little bit of a breather. I mean, if you look at inflation in the 1940s, if you look at inflation in the 1970s, it never goes up in a straight line.
Sure.
It never goes from 5 to 7 to 9 to 15 to 25. It doesn't do that. It goes up. There's a lot of volatility in the interim. If we go from 7 billion people to 10 billion, that means there's an additional potential 3 billion scientists,
right?
Entrepreneurs,
yes,
and people that can solve these problems that don't exist today.
Yes.
And therefore, the probability of us finding someone that can solve those problems increases significantly. But we have to allow the free market to solve those problems.
Yes.
And the main way that you do that, Mark, and this probably takes us back to another topic of price controls, is you have to let the price mechanism work. You have to do that. That's so crucial. I was reading a book from Thomas Sowell the other day called Intellectuals in Society, and he pointed out that I can't remember which decade, but there's a certain point in time where the central planners in the Soviet Union were responsible for setting 24 million prices arbitrarily.